Welcome to my weekly review. Today is May 4th. The market is closed. It's Saturday, but there's still business dealings going on. So we'll get to that in a little bit. You're looking at a weekly chart. This is a weekly review. So I'm showing a weekly chart of the Nasdaq, and you can see that that old high of 16,212 from November of 2021 is still providing a little bit of resistance here for the index. I mean, it pulled back below it, traded above it, pulled back below it. And now it's just kind of right there. Last week it was up 228 points or 1.43% and closed at 16,156. So it's just right there at that level. What we want to see is it break through, to the upside. I believe it will eventually, but it's going to take some time. And if I just go to the daily chart on the NASDAQ, if market surge will, okay, so we could see a little bit more of the recent action from this 32% move from October 26 to March 21. Then you see the pullback. This is a 9% correction below all the moving averages, and now it's trying to rally back through these moving averages. And the significance of the Friday close here, as you can see, well, obviously it was up, 2%. But it traded above all of its moving averages. And now this 10, which is the green line, and the 21 is the magenta, they're starting to curl up as the 50 goes kind of sideways. So what I'm looking for is these shorter and faster moving averages to trade through the longer or slower 50-day moving average. So we'll just have to wait and see. Good day on Friday. It was up 315 points or 2%, like I said. Close at 16,156. If you're a volume person, which I'm not, you'd say that, it was Thursday was an inside day. People were wondering if it was going to be a follow-through day, and it's pretty rare that you have a follow-through day that's just an inside day. You want your follow-through days to look kind of like that, right? They stick out on the chart. This one does not, but it didn't have the volume from the selling of the prior two sessions, which saw some heavy selling on Tuesday and Wednesday into the Fed meeting. And then after the Fed spoke, we had a couple, relief rally type days on Thursday and Friday. I don't want to dissect it too much. The move following the Fed meeting was positive, and the Friday close was nice, but it still has a lot of work to do. I'm going to take a look at the IWM. I'll look there. Not a follow-through day either. It didn't have quite the it had the volume higher than the prior session, but didn't have the movement. Follow-through day should be pretty substantial. You should be able to, it should stick out. This is the SPY, and this one was volume higher than the prior session with a 1.24% move. So that would constitute a follow-through day. That is an ETF. I like to look at the index, and on the index S&P did not have the volume. Okay, it had the move at 1.26, but not the volume. And then the Dow Jones Industrial Average, follow-through days are, signs to buy. It's confirmation signal, and I don't think we're getting the confirmation signal. The volume isn't there. The 1.18 move was nice, but not with the volume. So anyway, I know what you think about volume is like, if my stock goes up 10% and there's light volume, I mean, you still have the 10% appreciation, doesn't matter what the volume is. And conversely, if you lose 10% and it's on light volume, well, you still lost the money, because as our friend Brian Shannon says, only price pays. This is Apple. Now they had a big correction here, downturn. All the moving averages are pointing lower. And then on Thursday reported not a disaster quarter. It looks like disaster was priced in, and they, reported 1% EPS growth, which is pretty feeble, but they have a $110 billion stock buyback program. And I guess this morning, Warren Buffett disclosed that he had, divested, I guess, like 13% of his Apple holdings. Now, Apple had like a three-legged stool that was propping it up. It had that stock buyback that I talked about, Warren Buffett, and it also had these funds that are buying it. But it looks like they've been reducing here recently. There's the Contra fund, reducing. All of them are reducing. Buffett's reducing, but they have this massive stock buyback of 110 billion that was announced on Thursday. So, they could try to put a floor underneath it, but if Buffett's selling and if he continues to sell, that'll kick out one of those three legs on their three-legged stool. So that's not good. We're just gonna have to watch Apple from here on out. I'm not, they have a measly dividend, tepid growth. There's not a lot of appeal here for owning this stock. Same with Microsoft. Just trading sideways in a base. Now this company should be one of the big leaders of AI. And so, it's consolidating in a base, kind of like it did here. Big base, flat base, moved higher. Now it's been in this base since, I guess you could say, the 420 from back on February 9th. So it's been, few months just sitting in a base there, nearly 3 months of going sideways. Microsoft, below its moving 50 right here. It did trade up to its 21 on Friday. Google's above all its moving averages, ramped higher with earnings pulled back to the 10 and found support there. So Google looks fine. Meta sold off following earnings, and now you can see these short-term moving averages trending down and probably act as resistance as Meta is timeout for a little bit. Meta Platforms is just spending a lot of money, and that was, a problem with their earnings. There was no problem with their earnings. They're fantastic. Same with Amazon. Quality earnings now above all the moving averages. And since it's a weekly review, it was up 3.67% last week. Not bad. The other one in this MAG 7, if you want to still indulge me with that lame expression, this is a Tesla up, nearly 8% last week. You can see their earnings line trending down, and the stock has just got a lot of resistance ahead of it there, especially at the 200 level. And then NVDA is the last of these 7 big cap, mega cap stocks. It undercut the 50 and then rallied back through. That looks pretty good to me, because it made this low here at 756, and now it's making higher lows consistently. And now on Friday, it made a high above this prior high. So definitely something to look at there. The prior high on April 30th was 888, and then on Friday it made a high of 892, and probably going to take out these other ones, 906, 907 as it builds the right side of this base here. Has earnings on May 22nd. Okay, I'm just going to go around the horn here and just kind of observe what's going on in the market. No agenda specifically, just looking around. This is the data storage group, which has been pretty strong. Silicon Motion had a nice move last week. You can see it's building a base there, and the earnings line now. This is a real cyclical business, and all these stocks are starting to turn up with their earnings, and so the stock price is following their earnings, which is turning around here. And Silicon Motion looked good. Micron is probably the leader of this group. You can see the bounce back here, the boomerang with the earnings. And so this cyclical business, these stocks should be doing pretty well here. NTAP, NetApp, another computer data storage. You can see they didn't have much decline in their earnings, but it's starting to tick up now. And this thing's consolidating in a double bottom base, looks pretty good. Pure Storage, another one in the group, and they're going to report earnings soon. So I expect a strong earnings report from them. 10% off the high, consolidating in a base. And anyway, that group looks pretty good. This is Western Digital. Once again, earnings were just in the tank, and now they've rebounded. So you expect this to last quarters and years even. Yeah, so that group looks like it's turning around. Okay, another group that I have to get to is the banks. I'm not real big on the banks, but I have to acknowledge that they're starting to show some strength here. You can see this double bottom base, the move higher than the sideways consolidation action, making new highs. This is Fifth Third Bank Corp. FITB is the ticker symbol. Charles Schwab's another one that I like. And you can see it broke out of the base and it's just surfing its moving averages higher. That's what a trend trader wants to see, support at the moving average. You can see the earnings line is heading south on this one, which I don't like. SF, which is stifled, consolidated here at that 77.72 trade range and now breaking out of it. Closed at 81.77 on Friday. just looks good. I don't like this earnings line, but you know, you just got to acknowledge the price action, and the banks are looking pretty good. FHN is yeah. Oh, this looks nice. That's why I put this on here. I might have this on my ready list as the banks are looking strong, and maybe this one's had enough. I'm gonna say uncle, but RS rating, you know, pointing up, had a nice week last week, 6.6% move. So yeah, I'm gonna keep my eyeballs on the banks. Okay, I got to get to the food stocks too. Mama Mancini. This one, somebody alerted this to me a couple weeks ago, and I started putting it on my daily reviews. I thought I'd bring it to the weekly review, just acknowledging the move. That's all. I don't own it. You can see the double bottom base, the breakout here. 9%, nice move, and now it's continued higher. And I'm going to get to some of these gaps higher on earnings, and it looks pretty healthy to me. Texas Roadhouse, definitely in the food group. The retail restaurant group broke out of the base. Now I don't like the close here on Friday. What is that? 15% of its daily range, but you can see that it's trying to emerge from this base. Earnings line headed, you know, in the direction that we like, heading higher. And Texas Roadhouse looks pretty strong to these old eyes. Wingstop is in this group as well. The earnings are heading north. This thing is an expensive stock, though. Make no mistake about it. And you can see the breakout from this base here, and then just been ripping higher ever since. Yeah, there's your breakout, and you move higher. Oh, it had the David Ryan ants here. Pull back to the 50 for the first time, found support, moved up. I believe that was earnings last week, that move. But anyway, had a good week last week, you know, up 1.5%, and just continues to grind higher. Like I say, it is an expensive stocks. And VITL, this is the last one, Vital Farms. Food meat, this is benefiting from the $10 eggs. You can see their earnings line heading straight north, and I like that. I like that in a stock because I believe that earnings are the greatest driver of price appreciation. These guys have the earnings. You can see the volume coming in if you care about that thing. You know, I'm not a real big volume guy, but there's your breakout, 12% the week of March 8th, and it's just been ramping higher. Talk about a Kelly Slater stock. This thing is just, yeah, pull back to the 21 one time. And so that was your chance to get Vital Farms. Anyway, that's enough for the food group. I have to go to the construction. You know, this is Granite Construction, slower moving stock, but, you know, it's heading due north. And I like to look at the weeklies on these. You know, it's just grinding higher. Not, you know, it's a steady eddy. It's just not, you know, SMCI or NVIDIA. It's not going to, you know, go up 100% in 2 weeks. But you got to acknowledge the move here last week, up, you know, 7%. Had the volume if you're into that kind of thing. And Granite Construction looks fantastic. They're doing some projects in our area. So I see their trucks around all over the place. PRIM, Remora Services, another one in this building heavy construction group. Now this earnings line is starting to head south a little bit, but you can see the base here, the breakout from the base and the move higher. And that's what you want to see as a trend trader. I mean, just a breakout and a gap and go. That kind of tells you the health of the market. If you're starting to see a lot of these trending higher, you know, breakouts that are trending higher in a sideways market, they'll typically just, you know, gap up and trade sideways. In a bear market, they'll come right back to their pivot area. And in a good market, healthy market, they'll just kind of trend higher. And that's what these are doing. So that's why I'm showing you these. I'm going to show you a lot more here coming up. Quanta Services, this one broke out back here on this date. They just reported last week, solid earnings. They're doing, you know, they're doing well, but 10% move with that kind of volume cannot be ignored, Dan, and have traded up to 265 from the breakout area of what, 212. So that's a nice move. Pulled back to the 50, ramped up, pulled back again. Following its earnings report, we're seeing a lot of, you know, really strange moves on earnings. Some lackluster earnings are ramping, and some really solid earnings are just squatting. So, you know, earnings are a very difficult time to trade. You just got to observe the action and make notes of what's going on here. VST, this is Vistra. They report earnings on May 8th, this week coming up. This thing's been a monster. I mean, for a utility, you know, electric power stock, this has been a heck of a move. You can see earnings have just been pretty flat while the stock has been ramping. I'm just going to show GE for general purposes, diversified operations, because I think it's, it's a strong stock, obviously. Just pulls back to the 21, pulls back to the 21, find support. And that's what, you want to see. When you own a stock, you want to see it supported. This is Eaton. They reported earnings last week, 28%, earnings growth. I mean, 22, 24, 28. That's what you want to see is, accelerated earnings. And so we should see that line heading due north. The stock price is probably going to follow if it continues in that fashion. Anyway, that's it for that group. I got to get to the oil and gas names. Tidewater, one of our leading stocks here in the oil and gas field services here at MC Stock Charts. We have it in our top 10. Reported earnings, nice 13% move on Friday with volume. And this is just, if you want to own an oil and gas stock, I believe this is a good one to own. You can see the earnings line just trending north like the stock. It's funny how that happens. AROC, I believe they go ex-dividend this week, but you could see, on the weekly chart, just grinding higher. This is another steady Eddie. It's not going to blow your socks off, but, I like the trending higher. This is a breakout from a base, went from, I don't know, down here, 18 to 21, then pulled back to the 18 area, ramped up, but now it's got, doesn't have earnings till July 29th, but oh yeah, it's going ex-dividend. Sometimes that'll hold the stock back if they pay a healthy dividend. I'm not sure what AROC pays. 3.27% yield, not bad. And the last one is OII. This is another one in the field services, and it's forming a base. I kind of like this one. Down 8% last week. I don't like that, but yeah, it could have been earnings related. I'm not following it that closely. Tidewater went up and this one went down. So that's pretty much all the information you need to know from their earnings reports. Okay, some software names. Datadog reports this week, it was above the 21 in the 50, now pulled back to the 21 in the 50, and it's trading tight. You can see those moving averages are just bunched up there, which is a guarantee of nothing. But they have to report strong numbers on the 7th, which is what, Tuesday? I believe it's Tuesday for Datadog. So anyway, I'll have that on our website here. The earnings reports this week. ESTC is another one that I like. It, made that low 93. Looks like a rounding type bottom. Now it needs to move through. It's 50. It's trading above the 10, above the 21. Don't like that candle on Friday. Closing range 6% of the daily bar, but just kind of consolidating here. I like it above its moving averages. May 31 is the earnings report, so I'm definitely watching Elastic, and also Spotify. This is one that I think you're just gonna, I think you gotta own. One of our leading stocks. Having trouble with that, Livermore ghost of the round numbers, the psychological 300 level, but rallied back through its moving averages, well above the 10 and the 21 there, 3.2% above the 21. So spot looks fantastic, I think. I mean, if you look longer term, if you're more a longer term person, you say, okay, the earnings line's going up, the stock's going up, it's doing nothing wrong. Had an inside week last week. It's just a hold. If you've owned it from lower levels, so it's doing nothing wrong. Another software name, somebody asked me about this one. It's a thinly traded stock, 215 million. I don't know why people love these. I guess because they really have a tendency to make big moves like it has, but it can get pushed around in the other direction as well. So this is why they're asking me to look at it. Nice move here, 6% on Friday, and trading above all moving averages. Volume coming into this one, but I mean, 182 is the average daily volume. It's got a market cap of 215. That is Audio Eye and the computer software. Software group. And the other one is GoDaddy. GoDaddy, they got the clever commercials. Yeah, just broke out here and ramping higher, minding its moving averages. Now it's trading sideways, but yeah, okay. So I looked at GoDaddy. I don't own this. Just some people asked me to look at them. I do like the earnings line just really ramping higher, so that's a good thing, and the stock is following along. That's it for me. Thank you for watching my weekly review, except for I lie. I have one more thing in honor of the great Steve Jobs, one more thing, and that is these earnings gaps we need to pay attention to. And this is the most important part of the weekly review, because the earnings gaps, every earnings season, we get, new leaders with new data points. And sometimes when the, analysts have a stock that they say, okay, maybe Tandem Diabetes is going to earn $1, and they have an earnings report and say they're going to earn $2, well, guess what? They have to revisit their models and raise their prices, and maybe buy the stock as well. This is Tandem, as a diabetes play, a medical product stock, up 22% on Friday. So this is a move not to be ignored, Dan. Not trying to be funny. You got to write these ticker symbols down and monitor these gaps higher. Because like I said earlier, in a bear market, I mean, it would just come right back down. We saw that many times in 2022, just come right back down to its pivot area. And then in a choppy market, you expect it to make the move and just kind of go sideways and be dead money for a few weeks. But in a solid, healthy market, you might see a gap and go where, they're going to trade higher. So write these ticker symbols down, get a pencil, pen, write them down, and follow these stocks. Start a probe position. I started a probe position just 1 or 2% in a couple of these, and see how they respond, how they react. To me, this is a breakout from that 99.63. We'll just call it the $100 level. Nice breakout after, long period of consolidation. This is a long base here. And it broke out on Wednesday and continued higher. What was the move here? It was a 25% move with big volume, then followed up with a 5% move on Thursday and a 2.8% move on Friday. So we'll take that every day of the week. So Transmedics looks good. Oh, ASPN, this is one that's in the group with SLCA, which got acquired recently, but this is kind of I wouldn't say it thinner. I mean, it trades $1 million, but it's market cap is less than 2 billion, and it broke out from a base here. This is Aspen, ASPN. Write that ticker down. You can see it went up 56% on Thursday, followed through on Friday with a 5% move. And that's what you want to see, a gap and go, continue higher. Like I said, these analysts, they were expecting a certain number to come in and they blew the number away. So now they have to reconfigure their models and, add higher prices. And also there's also, short covering aspect of this. When shorts own the stock at, they won't think it's going to go down. They shorted it at 15 and now it's at 25. You better buy to cover. You're going to take bigger and bigger losses. So this one looks like 9%, not exorbitant, but that is a factor that you have to look at. Carvana, speaking of short covering, they had, pretty strong earnings here. You see triple digit earnings and 17% sales. This thing has turned it around. Congrats to those at Carvana. You can see this earnings line heading due north, and the stock is following right along with it. 44% weekly move. Fantastic move for Carvana. Up 4% on Friday after a 33% move on Thursday. So yeah, write these down, man. These could be your new leaders here, as the old guard maybe failing a little bit, and some new ones are coming in to appreciate for more stock price appreciation. This is Lantheus. Gapped higher on earnings 16%, just pulled back a little bit, 3.3% on Friday. Definitely one to watch, though. That has been a big winner for a long time. Valmont, I have no idea what they do. I'm just telling you, they went up 17% with volume on Thursday and followed through with a move on Friday. So that's what you like to see. Metal fabrication stock. I look at the cash flow and the return on equity whenever I'm looking to buy a stock. This one had a massive sell-off, so it's trying to break out of a stage 1 base. But you could see the earnings headed due north. So that's what you want to see. In a stock that I own, I want to see some earnings, darn it. Let me see. Oh, MTZ. This is another one in the heavy construction group, which I showed you earlier, which was really strong. This one, you could see the earnings starting to rebound, was heading south, and now it's going the other direction. This one's still in a stage 1 base. This is Tech MTZ. Definitely though, the gap higher, daily closing range, not good, 12%, but definitely one to watch here going forward. Qualcomm, this is a larger, more liquid semiconductor fabless name. It ramped 10% on Friday, gave a little back on ramped on Thursday, gave some back on Friday, and I'm still interested in this double bottom base here. If it wants to pull back to that pivot area, I'm fine with that. I don't want to see it close the gap though at 169. THC, this is Tenet Healthcare. I'm showing you a wide variety of different groups that are just ramping here. So that's healthy, I think, for the overall market. 13% move with volume. That's a gap and go here. Closed at 112.29 on Tuesday, Wednesday 115, Thursday 118, and then Friday 120.28. So that's what you want to see, the gap and go move. Very nice move. Tenet Healthcare. Lending Tree is another one that gapped earlier in the week and followed through with higher prices. That's what you want to see. That's a 29% move with volume. So I'm just going through these. I don't own many of them, but I do like to take a swing at a couple of them. IESC, this is one of the top stocks and one of the top groups, along with the EME and Rollins, but this one broke out on Friday, 18% move with volume. The daily closing range was 55%, which I don't like, but yeah, just one to watch, kind of a thinly traded one, but just acknowledging what's going on here. LMAT, this is another one I know nothing about, medical product stock. I like the base here, the big move, 11% with volume. Just one to watch, write that down. And of course, Pens, everybody knows about Pens, Pinterest. Elliott Management got in this one. And it's been doing well ever since they've taken, I guess, a couple seats on their board. But anyway, had a big move on Wednesday and kind of flattened out, 21% move, and made it above 40 and closed there at 40.41. So and the last one is LOCO. Now LOCO had a 16% move with massive volume. The daily closing range was 16%, which I don't like, but you got to acknowledge here on this. First of all, the restaurant stocks are hot. I showed you Wing and Texas Roadhouse, but Chipotle and Shake Shack, a lot of them are doing really well. But this one is trying to break out of a stage one base. Well, actually, you could say it did break out of a stage one base on Friday. Just going to have to monitor this. But you can see the sales, they have 120 million, 120 expected. So they're doing about 500 million in sales, and it's a 313 million market cap. So it's trading at less than 1x sales. It's got a little debt, but it's got cash flow and return on equity. So I'm definitely interested in El Pollo Loco going forward. Anyway, that's it for me. Thank you for watching. Next week is a new week. I kind of like it if the Nasdaq can, bust out and make some new highs and get rolling here. It's not sell in May and go away. Don't listen to all that BS. Just watch it one day at a time. And I'm seeing some new stocks setting up in bases that look pretty good. And that's what you need, healthy setups, stocks moving higher, a big breadth, a bunch of stocks moving, not just, 7 stocks. And anyway, that's it for me once again at mcstockcharts.com. We never give up. Have a great weekend, everybody.